I'm here in the Englewood Cliffs headquarters studios with Robert Kaplan, the president of the Dallas Federal Reserve Bank. Mr. Kaplan, President Kaplan, let's start off with the outlook for growth.
Yeah.
I want to talk about it short term and then sort of longer term.
Yeah.
Our CNBC rapid update running at 1.5% for the fourth quarter. That's the median of tracking forecasts. Does this seem like the low to you in the growth slowdown? Is it up from here?
Yeah, we think the fourth quarter is going to be weak, we at the Dallas Fed, and we think that we've got a good chance to grow at 2% next year. One of the reasons the fourth quarter is going to be weak, we believe, is probably a significant inventory adjustment, which might be as much as 0.5% or more of GDP growth.
Where does that come from, that inventory adjustment? Why does
this means people have been destocking, and probably the reason they were destocking is there was a lot of pessimism over the last number of months about, future growth prospects. So businesses destocked. We'll see that show up in the fourth quarter, but we think things will stabilize. We've got a good chance to grow at 2% next year.
So let's go to the long-term part of it. Is 2% the run rate? We can't get out of it. We're not going to go below it. We can't really get above it because a lot of folks wanted us to grow. Everybody wants us to grow.
I agree. And I'd like to grow more. And here's the issue. We've got some structural issues that are not going away. Aging demographics, aging workforce, which means slowing workforce growth. And our productivity's been sluggish, mainly, we think, at the Dallas Fed because of lack of investment in skills training and education, and also this sluggish CapEx that we're seeing, probably due primarily to deglobalization, is also reducing productivity. And so GDP growth is made up of growth in the workforce and growth in productivity. So we think at the Dallas Fed, potential GDP growth in the United States is 1.75% to 2%, but it gets worse. If we don't make some policy changes, we think over the next 5 or 10 years, it's going to slowly decline.
Be even less than that.
It will, yes.
But what if we were, for example, to stop this deglobalization, which I think is a euphemism for the trade war?
It's a euphemism.
Maybe the trade war is a euphemism for deglobalization. Anyway, isn't that somehow subtracting from growth right now?
Yeah, I think weak manufacturing, weak global growth, weak business investment all relate to uncertainty regarding trade. And if that got stabilized, I think we'd have a chance to see those measures improve.
How fast could the economy grow if we put the trade war behind us?
I'm still of the view, and we're of the view, potential in the U.S. is around 2%. And for people who are disappointed in that, I'm disappointed in that. And we should be, because we're very highly leveraged as a country, particularly at the government level. But if you want to grow faster, we need policies away from monetary policy. Monetary policy is not going to address this. You need infrastructure spending. You need immigration reform. You need policies that improve education, skills training.